One of the greatest challenges in today's real estate market is affordability. But what if there was a secret weapon that you could possibly employ in today's market to battle home affordability? I'm Tim Pierce with the Pierce Group at eXp Realty, and I'm going to share with you information about assumable mortgages and how that can be an incredible strategy to use today to keep your affordability in check. Most people don't know that most government-backed loans, USDA, FHA, and VA loans are assumable, and we'll talk about what that means. But for conventional loans, most are not assumable because they have something called a due on sale clause, meaning that when you sell the property, that full amount is due to the lender. But what's unique about the government-backed loans is that they are often assumable, and so let's talk about what assumable means. Assumable is exactly like it sounds. So if you have a loan and you're selling your home, or if you're buying a home, there's a chance that you might be able to assume the terms of the existing loan that current seller has or pass on those terms to a buyer. For a buyer, that can mean great savings, particularly in today's market where rates are high and home affordability is a challenge. And for sellers, it can be huge because you may sell your home for more money, particularly if it is marketed properly, and it's a huge benefit to a seller. So let's dive into some of the key things you're gonna wanna know about assumable mortgages. Number one, I'm gonna give you an example of someone that might be selling a home that has an assumable mortgage in today's market that maybe bought this home several years ago and they've had a lot of appreciation and benefited from the headwinds of this market. So let's just say that a seller has a home where they've got a rate of 3.5% on an assumable mortgage. They owe $400,000, but they're selling the home for $500,000. Well, who makes up that difference? The $100,000 of difference is going to be made up by the buyer. So in this scenario, that may not work for everyone. And sometimes the equity in the homes can be much greater. Sometimes they can be much less. But that can be a huge difference for you as the buyer if you're able to pay off the equity in that home and benefit from a 3.5% interest rate in today's market, where rates are hovering around 7.6 to 8% on a 30-year fixed loan conventional. So next, I want to talk about some pros and cons of assumable mortgages. And this is going to apply both to buyers and sellers in different circumstances. So we'll start with cons. Some of the cons of assumable mortgages, one would be that you oftentimes have to jump through some more hoops, both for sellers and buyers. If you're a seller, you're probably going to have to request an assumable mortgage packet from your lender and go through that process. As a buyer, you're oftentimes going to have to be prepared for a little bit of a longer close time frame. For VA loans, we've seen that take as long as 60 days. For FHA loans, they actually have a clause that states that they've got 45 days to approve the loan from the time that the application is made. So being prepared, talking to your lender, and making sure you understand how much time you're going to need to close is essential. Number two is that there's often limited availability of these types of loans in any given market. They are definitely there. We've come across them many times. I think just this past year, I remember looking at one that was a 4.25% interest rate, which was terrific at the time because rates were in the 8-ish range, where they that buyer could save a lot of money in that situation. And I think there was probably about $100,000 in equity to pay off. However, there is limited availability, particularly if you do not have VA eligibility. So when you're talking about a VA loan, a seller that has a VA loan oftentimes does not want to give up their VA eligibility. So if you're buying a home and you don't have that, they won't be able to pass that on to you. However, there are some sellers that have VA loans that would be willing to give up their VA eligibility, but it's rare. The third is, as a seller, you're going to want to make sure that you ask your lender for a release of liability, because the last thing in the world you want to do is be on the hook for a buyer that has assumed your loan but is not making payments or has defaulted on the loan. So a release of liability is essential and will make sure that you're protected as you move forward. Before we cover pros, if you have any questions about assumable mortgages, then please make sure you drop a comment and we'll get back to you, or you can find our information in the description below. If this is one of your first times checking out our videos, do us a favor and subscribe and click the bell button so you'll be notified when we send out new videos. We're here to help home buyers and sellers in South Carolina. So let's cover pros. So pros, one of the most obvious pros is that, from a seller standpoint, the marketability of your home can be drastically improved, particularly if it is being marketed properly. So if you have an assumable mortgage and that is considerably less than today's rates and it's being marketed properly, there's a chance you could sell your house for more money in today's market and with greater ease. The number 2 pro is for buyers. And in today's market, if you're buying a home that has an assumable mortgage that was originated maybe several years ago, it's very likely you're gonna have a rate considerably less than what's on the market today. So that can save you money on your monthly payment. In addition to that, you may actually be assuming a loan that has a shorter term because the seller's already been paying on that loan. So let's just say theoretically that a seller has a loan that they've been paying on for 5 years. It's a 30-year loan. You're gonna assume a 25-year loan. And then the third part of that is you may actually find that you have lower closing costs as well. If this is something that you're interested in, we have a complete list of all the homeowners in our area that have FHA, VA loans, USDA loans, and we can help to find homeowners that might be interested in selling that could potentially have assumable mortgages. So if you're interested, make sure you reach out to us. We'd love to help you.